You ever watch a man stare at a house he doesn't want to buy? That's New Zealand right now. Quiet streets, for sale signs swaying in the wind like forgotten promises. The dream of property ownership hasn't died, it's just waiting for a sign. Welcome to the pause, not a crash. Friend of the show, Kiwibank Chief Economist Jared Kerr returns to talk about why Kiwis have hit the brakes and whether they'll ever put their foot back on the gas.
Financial freedom faster. Financial freedom faster.
If you like making money rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting their New Zealand housing and real estate intel from this show than any other YouTube channel in 2025. Jared, is this the pause or a structural shift in New Zealand's property psyche?
Yeah, great question. I think it's one of these things where it's, activity will fuel activity, which will fuel activity. We've had a lift in confidence, and that's one thing. People are, more confident in the housing market today than they were last year. Okay, fine. What does that mean? Unless there's transactions happening, there's a lot of stock on the market which is struggling to clear. I think there are signs that we are seeing an increase in activity, but we've been saying that for a year. We see these green shoots, then they die away, then they regrow, and then they, die away. So we're kind of hoping that the green shoots that we're seeing now, as interest rates keep getting lowered, actually turn into something. And I think the true test for our market will be in spring, right? I mean, we're in the middle of winter. Like, not many people want to sell in the current environment. They wait till spring. So that's when we'll get that true litmus test.
So house prices, based on your judgment, still trending in that upward direction, just slowly?
Yeah, I mean, we've been calling for house prices to be rising for a while now, and they keep surprising us on the downside. And we've been the most cautious, the most dovish, if you like, out of many commentators, and even we've been surprised on the downside. So it is an area that we're kind of waiting and watching. We believe in the process that if you cut interest rates far enough, you will stimulate activity, and I think we will get it. So our forecast is still around 1 to 2% growth this year, so nothing really too exciting. But then once that takes hold over 2026. Confidence feeding activity, then I think we'll get sort of 5-6% house price growth next year.
And what are you seeing at the ground level, the credit appetite, the applications coming through and the approvals and conversations with buyers?
So we spend a lot of time talking to brokers and developers and everyone in the market. Confidence is definitely higher. It's definitely high, no question. But that execution is not there yet. So we're just not getting the activity that you would expect right now. So we're hoping that picks up. We are hearing good things from investors who have been sidelined for the last couple of years. But again, they sort of say, yes, this is good and looks good, but I'm trying to rebuild equity in my portfolio because it's been hit so hard. And some are even pointing to the election next year, saying, if we get a change in government, then that changes the state of the market yet again. If we get bright line tests extended and interest deductibility taken off again, it's still a threat. It shouldn't be, but it's still a threat to investors.
Yeah, certainly if there is a holding pattern for 2026 because of the politics, it's not going to be great. How's the reality of negative equity for a lot of homeowners impacting market behavior?
It's very slim. Like, you would have to have bought, right at the peak in sort of 2020, 21, or even 22, and you're down now. So you're talking a very small percentage of people. Most homeowners have been in the market for at least a few years, and if you've been in the housing market for 5 years, you've got plenty of equity there. So it is a small percentage. Unfortunately, those people are slightly underwater. but if they've got a job, they're still paying. We're not seeing a material lift in defaults.
And you've talked about some government policy. If we look a little bit closer, we've got RMA reforms coming through. Now, what's the likely impact of things like granny flats on the market? Are you guys releasing any special products for funding or doing any studies on that sort of thing?
Look, it's interesting. I think it all helps. Anything that enables an increase in supply, whether it's a granny flat or whatever, we're keen to see, because New Zealand clearly has a chronic shortage of affordable dwellings due to a lack of infrastructure spending for decades, and this is our big problem. So anything that's adding to the stock, helps, whether it's into a rental market or even just friends and family. More roofs overheads is what's needed.
Just a reminder, your competition has already subscribed to the fastest growing property and investment channel in New Zealand. That means they're getting the insights first, making the moves first, and locking in profits while you're still debating whether to click a button. Be smart, subscribe. Is Kiwisaver funding the way to fix the infrastructure spending shortage, or how's the government going to?
Yeah, I mean, why not? I mean, how much of our Kiwisaver money goes offshore? Quite a lot, actually. The majority of it goes into foreign markets, because it's of a size now that it would saturate the New Zealand market. So money has to go overseas. I know for a fact that your NZ Supers and these large funds would love to participate more in the New Zealand economy, whether it's infrastructure or housing or whatever. They would love to participate more. So yeah, why not? Let's get them in. Let's get some people with long-term thinking. We're going to build something over the next 20 years, not through 3 yearly election cycles, on, off, on, off, on. No, it doesn't work. You've got to be able to leverage up. You've got to be able to plan 10, 15, 50 years ahead.
Well, that's Kiwisaver providers. That's the mandate, right? To think long term, especially the charitable ones or the big established ones. Is this the opportunity for first home buyers then? It's still flat market, or proceed with caution?
No, I don't. No, I don't think proceed with caution. I think if that's where you're at, in your life, and you've got your deposit and you're having a look, we have seen that of all the groups out there, actually, the first home buyers are the ones that are increasing. So they've been on an upward trend for as long as the data goes back. And they're becoming a greater part of the activity right now, more so than investors. So I'd love to encourage that, and hopefully that continues. And you're right, you're in a market where the pricing power is more in the hands of the buyer than the seller. So it is a good opportunity, I think, right now.
And how does this period of stagflation compare to other periods in New Zealand housing where we've had slowdowns?
Yeah, I mean, this has been a bit more, protracted, a bit more sort of longer and painful. So like I said, we've been calling for a rebound that hasn't happened for a while now. I think it does take off, and it's one of those things that when it does move, it will become a lot more self-fulfilling.
And what are the macro indicators we should be looking for to really spot that bottom?
Yeah, excellent point. I mean, I think for starters, it's the surveys. So it's the surveys of businesses and households. How are you feeling? What's going on? Are you optimistic? Are you pessimistic? And hopefully that pessimism that we've seen, which is lessening, turns into outright optimism. That's when it's that moment there where people go, okay, now I am going to spend a little bit more, or the business turns around and says, now I am going to invest a little bit more in the business. I am going to hire more. It's that turn in sentiment, which we've had a couple of false moves But I think we're getting there now. That's when it changes, and that's when we start going, all right, now we're going to look for all these other things, more activity data. So I think that's what we're looking for.
Well, it doesn't bear thinking about if we don't get through it in the next year or so, and then everybody does start just waiting for the election. That's really up to coalition government to display confidence and competence.
Yeah, this is their year. I mean, I hate to say it. They've been in for 1 year. This is their second year, and this is their year. They've got to get stuff done. They have to, because next year is an election cycle. I don't care who you're voting for, but three years is not enough. It's not enough for a government to come in and have a proper crack at what they want to do. But here we are. This is the year. They've got to get stuff done because, like you say, election year next year, and I agree. It would be unfortunate if we're sitting here discussing politics and the economy's stagnating because of it.
Well, appreciate your insights today, Jared, and look forward to your next report and follow along and catch up again soon.
Thanks for having me on.
A final reminder, money moves fast and the investors making the most of it are here. This is the fastest growing property channel in New Zealand for a reason. If you don't subscribe now, just know that someone else is already using this knowledge to make their next deal while you hesitate.